All right, welcome back, everyone. Next, we have West Red Lake Gold Mines Limited. It trades on the OTCQB under the symbol WRLGF and on the TSXV under the symbol WRLG. It's a mineral exploration company. It's publicly traded and focused on advancing and developing its flagship Madsen Gold Mine and the associated 47 square kilometer highly prospective land package in the Red Lake District of Ontario. Happy to welcome Vice President Communications, Gwen Preston. Nice to see you again today, Gwen.
Thank you so much for having me. Nice to see you as well. And thanks everyone who's watching. We have been at this conference a little while ago. It's great to be back and hopefully give everyone an update on a project that has progressed a lot. In fact, I was just listening to Anna's short introduction there and realizing we need to update that a bit because we are not appropriately best described as a mineral exploration company anymore. We are a gold producer. So we turned our gold mine on a few months ago. We're in the process of ramping that gold mine up from, the starting out tonnages and amounts through to, the way that we want this mine to operate. We expect to reach that, to be in full production early in 2026. And so I'm excited to take you through everything that we've done in the last little while and where we are headed. These are disclaimers. I make forward-looking statements. Feel free to return and read those at your leisure. The reason that we are here, as in the reason that West Red Lake Gold exists, is because, there's a team here who recognized a few years ago that there would likely be a gold bull market coming, and that the best way to generate leverage, outperformance in a gold bull market is to be a company that starts small and gets bigger during that market. So more specifically, that means a company that puts a new gold mine, its first new gold mine, into production early in a gold bull market, and then grows as a company, increasing its annual gold production through that gold bull market, because then you're creating new value while the value of the thing that you produce is also rising. This pattern of outperformance for companies that achieve that trajectory, it's happened many times before, and it is already happening again. This chart just shows how new and growing miners are already outperforming the GDX and the GDXJ, which are the baskets of gold miners. And West Red Lake Gold is a brand new entrant into that group. And I'm going to spend the next 10 or 12 minutes explaining why we believe we not only deserve to be in that group, but will start to shine in that group as we get Madsen fully off the ground and then grow from there. So speaking of growing from there, where are we now? What are we doing? And where are we going? So our first goal right now is to get this mine fully into production, into being the mine that we said that it was going to be, with operational stability. So there's just a few more components to the operation that we're getting going right now. There's a big thing that we accomplished just last month that had to do with what we did with all the waste rock underground. Now that's being managed underground, which is a nice efficiency advantage. Next month, we expect to get another one of those big efficiency aspects underway, which is starting to use the shaft to move some of our material, some of our rock out of the mine, instead of trucking all of it. So these are operational things that we need to have in place and running before we're ready to say, okay, this mine is where we want it to be. And so we have a few more pieces of equipment showing up, like big trucks and the scoops that you use to load those trucks underground. Those things are still coming. So that's what ramp up is about. And we expect to complete that process, like I say, round about the turn of the year, so that early next year we can declare commercial production. That is the first goal. And I suggest that that is the goal that the market is most focused on for West Red Lake. Is the Madsen mine going to work? Is it going? We as a team are really confident that the Madsen mine is going to work. We see what's happening there. We see the ramp up. We understand the plans. We see the really strong correlation between what our model said this deposit would give us and what we're actually getting out of the ground. Those things are lining up really nicely. We know the things that are required for a mine to work, and we're seeing them in place at Madsen. So we think number one here for us is a check mark. We realize the market still wants more data and wants to see that this is happening. But for us, number one is something that we're doing. And so we are also focused on the second item on this slide, which is how do we get bigger? So the Madsen mine in 2026 will be something like a 50,000 ounce per year producer. That's great as a starting point. That's a foundational asset for a new mining company. But we think, as I said, that it's very important to grow a production profile during a gold bull market. And so we've charted that path. What's really important in that path is that right around the corner from our Madsen mine, we have another project called Rowan that we are pushing towards production. It will send its mineralization to Madsen to be turned into gold. We have the infrastructure at Madsen to do that. And that means, assuming that we can just get that off the ground as planned, that means that we have good potential to double the amount of gold that we produce from where we start at the beginning of 2026 to by the middle of 2028. We expect to double our gold production. And that production growth, I don't think, is something that the market is pricing in at this point. But as we prove Madsen to the market, I think focus will shift to that growth, because that's what investors really love in a gold market. And then number 3 is growth beyond that. We as a team are mine builders. We want to build a major gold mining company right now. So we're also already looking for what additional assets, what other mines we might buy to bring into the stable. We'll see what that turns into, but we are looking for growth, and we're very oriented in that way. I've kind of gone through some of this, but this is to lay the land. Our Madsen mine is located almost in the middle of Canada, on the western edge of the province of Ontario there. You can see in the inset map. There's 2 land positions that we hold there that are in red on the main map. Our Madsen mine is the lower, the more southeasterly of those 2 land packages. That's where the mine is. The one that's a little bit to the northwest, that's our expansion project, our Rowan project, 30 kilometers away as the crow flies, 80 kilometers when you go around the end of the lake. The Madsen mine has a history. This is located in Red Lake. Red Lake is a phenomenal and famous gold jurisdiction. There have been 30 million ounces of gold pulled from the ground in Red Lake in the last 100 years. Madsen mine contributed to that with 2 million ounces in the 40s, 50s, and 60s. Then it went dormant for a good long period of time. Then a company called Pure Gold bought the Madsen mine and realized there was good opportunity to find new gold in and around the old mine. And they did, to the tune of 1.7 million ounces of 7.4 gram per ton gold, a really nice high-grade deposit all in and around the old mine and going down deeper from it. So then they did all of the work and put that mine into production. Unfortunately, that group hadn't done that before, which is to say hadn't put a mine into production before. So they didn't know what they didn't know. They cut corners that they did not realize were very important. And unfortunately, their version of the Madsen mine went bankrupt after only 14 months of full operations. That was devastating, certainly for the shareholders of Pure Gold. It did, however, create an opportunity for West Red Lake to come in and buy an asset that was mostly built. There were some more things needed, but mostly built, fully permitted, had a great deposit with, good metallurgy, good ability to separate the gold from the rocks, and in a phenomenal gold jurisdiction. So that's what we did. Then we spent the last 2 years getting this thing ready to restart in a robust, reliable way. And we did that at the beginning of summer. We restarted this mine. Now we're going forward from there. So I'll just touch briefly on what went wrong last time. I say there's 2 baskets of things that went wrong last time. One basket is how they approached defining the deposit and then mining it. And really that comes down to they just didn't gather quite enough data to have a good enough model of the deposit. Red Lake gold is really high grade. There's lots of it, but it's not easy gold to mine. It's spread along veins, and it's not continuous on those veins. There's a chunk of it here, and then there's nothing, and then there's a small chunk and nothing, and then there's a big chunk and nothing. And if you don't do a lot of drilling to figure out where those chunks are, then you run the risk of just not knowing accurately enough where to mine. That's really what happened with that prior operator. They tried to mine this deposit when their drill holes were still too far apart. A huge amount of the work that we've done in the last 2 years has been tightening up the drill hole spacing from 20 meters between holes to 7 meters between holes to inform a really accurate high-resolution model so that we can mine effectively. And we tested that workflow with a bulk sample, and the colors or the numbers in green there, those are the results of that bulk sample. The goal here was to compare what our model said we would get out of the ground with what we actually got out of the ground. And those numbers, those things lined up almost completely. So that was the green light that we had fixed the first basket of problems that plagued this operation last time. The other basket of problems is what was built, or more specifically, I should say, what wasn't built at site. Again, that team, the prior operator, didn't know what they didn't know. They, in multiple instances, decided to postpone projects. We'll do that when we are in cash flow. Unfortunately, the lack of those projects meant that they just didn't have a very efficient operation. If you want a mine to be a success, you need to mine the right rocks, and then you need to mine and you need to mine and move and process those rocks as efficiently as possible. And so they weren't mining the right rocks, and their setup wasn't efficient. That's really what it came down to. This is a list of the major capital projects that we did at site to fix that side of things, the things that were missing on site for this thing to be able to operate effectively. Now we're in ramp up. As we checked those, as we got those 2 green lights, checked those boxes, then we said, let's turn this thing on. Now we're in ramp up. These charts show, the upper chart shows tonnage coming out of the mine, mineralized tons coming out of the mine. That's really the critical path for Madsen. We're happy with how that is marching higher. There's variability in ramp up, so it isn't going to be consistent. That's part of the plan of ramp up because there's projects that you're still finishing. So some months you can't focus as much during ramp up on mining mineralized tons because you've got to do something else. So we're happy with how the tonnage is ramping up. We're confident that we're going to be able to keep that trend rising to get us to the level that we want to be at and for commercial production, which is that full-scale production early in the new year. The chart on the bottom shows reconciliation. So the comparison again there between what the model says we're going to get and what we actually get. And we're very happy also with that reconciliation. So ramp up is underway. We're happy with how it's going. Okay, so I said the market is really focused on, is Madsen going to work? And as the market, I suggest, starts to believe, yes, Madsen is going to work, the question becomes, well, what does that make West Red Lake worth for an investor? What's the investment thesis here? And the investment thesis starts, I suggest, with what is the value of the Madsen mine, right? The value of the Madsen mine starts with the official mine plan for Madsen, which is the pre-feasibility study, a PFS. It's a study that we published. We published it in January. It absolutely validated our approach, which is to restart this mine. It gave it an almost $500 million valuation. It outlined over $90 million in average annual free cash flow, all good reasons. And there's upside on an investor perspective from those numbers, given multiples that are usually given to those kinds of things. But the mine that we're actually operating is a bigger, more efficient, longer-lived mine than what that study outlined. And it's for a very specific reason, which is that mine plan, that pre-feasibility study mine plan, used a really low conservative gold price in designing what was mined. Think of a deposit. There's lower grade, high grade mixed in the deposit. If you use a low gold price, it only makes sense to mine the highest grade bits of that deposit. That's the mine plan that is in the PFS. And it makes sense, like I said, with those numbers. But when you use a higher gold price in engineering the mine, you end up taking more of the deposit. You take some of the halo mineralization, you mine more tons, and that ends up being a lower cost, longer lived mine that produces more gold. What you're looking at here on the left, that's what sort of the mine plan looked like in that conservative pre-feasibility study. So the chunks of blue are the sections that we would mine. The lines are the tunnels that you drive to get to those sections, stopes and tunnels, right? The images on the right are what the mine plan looks like in reality. We're mining much more of this deposit. We don't have to drive as many tunnels for each ton of ore that we get to. When you can take bigger chunks, like the images on the right, then you get to do it with a lower cost mining method. This is a much more efficient, larger, longer lived, lower cost mine than what the pre-feasibility study laid out. So that's a really exciting and important consideration for anybody who's looking at West Red Lake. As we convince the market that we are successfully putting the Madsen mine into production, then think of this, we are going to demonstrate through our production results that this mine makes a lot more sense even than that pre-feasibility study laid out. I'll also highlight that this is a really high-grade deposit. There's a reason that it's worth the effort to do it's worth all of the effort that it takes to mine in Red Lake. And it's because Red Lake has some phenomenal mineralization. All of that drilling that we've done, like I said, has been tightening up drill hole spacing. So these are all results from those infill holes. These are drill holes that are in between previously drilled holes. And these are ones that, I mean, there's been lots of them, but these are ones that returned much higher grade intercepts than the model before this infill drilling would have outlined. And it just reminds you that this deposit is really, really strong, like 12 meters of 60 grams, 4 meters of 45 grams, 10, there's really 19 meters of 50 grams, 10 meters of 114 grams. There is really phenomenal mineralization at this deposit. And we do expect to continue finding that as we keep working. There's a lot more to find in and around what's defined. And then as we continue to depth below what's ever been touched before at the Madsen mine. Okay, so Madsen is the first goal. Get that up and running, convince the market that we have a great mine in Madsen, then layer on Rowan. Rowan is around the corner. We've done an initial mine plan. It has strong economics. The idea at Rowan is to develop an underground mine that has a water treatment plant there and a small camp for the workers, and doesn't have a mill, doesn't have a tailings facility. So is a relatively easy permitting hurdle because it doesn't have the tailings and the mill. And so we would mine at Rowan and then truck that mineralization down to Madsen, where we have capacity at the mill to process the 400 tons per day that the Rowan project will spit out. So we are pushing this thing forward. We expect to do a new PFS level mine plan for Rowan that's joint with a new PFS for Madsen. So let's do an official, strong engineering level mine plan for these two projects together. Let's publish that in the third quarter of next year. That will inform the permitting. We expect to have permits in hand early in 2027 so that we can have Rowan in production, sending mineralized tons out of a portal early in 2028. Adding 35,000 ounces a year has the potential to essentially, plus some increase of production at Madsen during that time frame, has the potential to take West Red Lake from an initial 50,000 ounce per year producer at the start of next year to 100,000 ounce per year producer in 2028. That is significant growth, and growth is something that investors love in a gold bull market. I'll wrap up just here with a share structure. We have 392 million shares outstanding. We do have a good number of warrants. So those who like to invest in warrants, they are all tradable warrants. They're listed at the bottom. I will note on that warrant table, there are 43 million warrants at $1 that expire in May. So if we can convince the market that we have unlocked Madsen and turned it into a mine that should be respected and appreciated, there's really good potential for our share price to be enough above a dollar that we get some of those 43 million $1 warrants exercised. There's a lot that this team could do to add value, to grow value for our shareholders with that kind of warrant proceeds. So I'll just point that out. And we've worked very hard to have very strong liquidity. We trade like water, many, many millions of shares a day. So as these expiry dates for these warrants approach, we are going to be able to trade through those levels. That is the quick introduction to West Red Lake, and I'll wrap it up there and give us 10 minutes to chat about some questions.
All right, thank you, Gwen. And thank you. We will update your intro. Congrats on that. Let's say you say this thesis behind West Red Lake is to grow from a small new producer to a mid-tier gold producer during this gold market. So talk more about why that's the goal, why that provides, as you say, particularly strong leverage to gold.
Yeah, for sure. I mean, it is always true in gold markets, and I think in a lot of markets, that growth adds, like if you grow the value of the company during a rising tide, then you get double benefit. So I think that argument plays in quite a few sectors, and absolutely plays in gold. I think in the gold sector, it's a bit amplified because gold goes through these bull markets and then these long bear markets. And in these long bear markets, a lot of projects lose all momentum. And so there just aren't very many companies that can be doing what we're doing, which is to say, companies with single assets that are putting a first mine into production. Most of those projects went dead over the long bear market. We were very contrarian in buying this asset and in accessing the capital over the 2 years, from early 2023 to early 2025, when still nobody really cared about gold. We were very contrarian, and that set us up to be in a position that very few companies are in right now. So I really believe that as investors continue to turn their attention towards gold, and that recognition of growth being a really good way to play the space starts to settle in with more and more investors, there's just not very many contenders on that list. So we're very, very keen to be on that list. We think it has potential to create some pretty strong outperformance for our company as we grow.
Perfect. And so top tier Canadian gold districts have classically come at a premium. The mines are worth more and the stocks trade at higher multiples. So is Red Lake one of those districts?
Yeah, Red Lake is a really standout gold district. I mean, if you talk about gold districts in Canada, it's top three. I mean, 30 million ounces of gold has been produced. We celebrated 100 years of mining in Red Lake actually just this summer. There's still a major operation right beside us that's run by Evolution Mining. That operation beside us has gone through a couple owners because of buyouts and whatnot. But it's the mine that made Goldcorp into Goldcorp. Goldcorp was a really famous, very successful gold mining company that was consumed by Newmont a couple years ago. And so, the mineralization in Red Lake is really impressive. You got to do the work. You got to do enough drilling to accurately define your deposit. But if you do, it will return the favor with very strong mineralization in lots of these, what we call jewelry boxes. So it deserves its fame for sure as a gold district.
Perfect. And Brad wants you to explain the difference in SIL and LH and how much you expect of each and how that differs in how you work with it.
Yeah, for sure. Okay, so that's a technical question. I'll just explain the context here for a moment. If I go back to here, I'll go back to this slide. Can they still see my slides? Yeah. Okay.
Yes.
So these are tunnels, or the lines, the blue lines are the tunnels that you drive to get to a mining area. Then you get to a stoping area, which is truly the tons that are mineralized that you're taking to send to the mill. When you get to those areas, the way that you prepare to mine is you drive a tunnel at the top and at the bottom of that stope, and then you're able to mine the area in between because you've constrained the top and bottom of that chunk of rock that you want to mine. There's two kinds of mining. Given that we have this image up, the ones on the left, they would require those top and bottom accesses to be quite close together, only about 4 meters apart. And so then you actually still have to do a lot of tunnels to access only 4 meters of mineralization each time. The ones on the right, which is how we're actually mining this, that is long hole stoping instead of the ones on the left are mechanized cut and fill. Long hole stoping, you can have your top and bottom accesses for your stopes 20 feet apart. And so the difference in the number of tons that you get for the amount of development that you have to do is very, very significant. So it means that you get more tons for your effort. That has to do with mining costs. That's why the mining method that's illustrated on the right is actually half the mining cost per ton of what's illustrated on the left here. As for sill tonnage versus stope tonnage, that still varies a lot depending on which area of the mine that we're in. I think right now we're at about 25% sills, which are the things that you drive above and below to get ready to mine, versus stope, which is the stuff that you mine in the middle. I think that's a reasonable ratio to go forward, but it will vary quarter to quarter depending on which part of the mine we're in.
Perfect. Thank you for that explanation. Graham wants to know about an update on how much gold was produced in September and thus far in October.
So, I mean, we issued our quarterly update on whatever it was, the 7th of October. So that certainly included the September numbers. So 7,055 ounces over the third quarter. And then we gave the tonnages that were done each quarter, and we gave the average grades. We actually gave a bunch of information on grade and tonnage in that news release. I can't talk about so far in October. We haven't made those numbers public yet. I will note here that mining is a variable thing. Mines are variable entities. It would be great if they were perfectly consistent. That would be easier for everybody, but they're just not. Sometimes you're doing more development, sometimes you're doing more mining. These things shift quite a bit. That's one of the reasons I suggest that miners do quarterly reports, because then you're seeing, a day-to-day or a week-to-week or even month-to-month numbers in context. Like it's a bit smoothed out over the month. So that's we have shifted to quarterly reporting on these things. We will be providing updates over the quarter on accomplishments that we get to, like getting the shaft going. That's going to be really important, like the final equipment coming onto site, a few of the other things that we have planned. We're really confident that we're ramping this thing up the way that it needs to get ramped up.
Tim wants to know, when might you drill in the 8 zone?
The 8 zone. Tim knows the project well. So the 8 zone, I don't have an image on this slide deck that shows it. If you imagine the Madsen deposit plunging down like this, then you come a little bit out of your screen and over to one side, and then there's a different zone called the 8 zone. It's not too far away, but it is out of plane of the rest of the deposit. The 8 zone is a super high grade zone. It's like 20 grams per ton versus 7.5 grams per ton as average grades for those, the main chunk and the 8 zone. The 8 zone, that happens because it's in a slightly different rock type called the ultramafic. These pockets of super high grade and ultramafic rocks are known to happen through Red Lake. So that's what the 8 zone is. We will get to the 8 zone. So I suggest that previous operators at the Madsen mine have focused on the 8 zone like moths to a flame, and have sometimes therefore burned because of that focus. The best way to drill the 8 zone is to develop so you're down relatively close to it, so that your drill holes are not super long, you're not killing yourself on drilling cost, and you're doing it with the ability to make good on that value fairly soon, which is to say you've developed pretty close and you're going to start mining it soon. So give us another year or two to get ourselves down deeper, and then we will get to the 8 zone. But you're not going to have to wait until the 8 zone. I believe for good high grade exciting intercepts, we are working to get ourselves deeper in the mine every day. Soon we will do a lateral drift out so that we can start to drill deep into our main deposit, and I think we're going to find some pretty nice stuff down there as well. So there's a lot more that could be said, but there's a short answer to that question.
Thank you. Emmanuel wants to know the status of the Nabari debt facility. Is anything else being drawn down?
So the Nabari debt facility is fully drawn down. So that's our 35 million US debt facility that we signed last January. It is fully drawn. We start to repay principal on, right now we're only paying interest. We start to repay principal on that facility in, it's either April or May of next year. I will also note that once we get 1 year out from signing that facility, we do get out of the window where there's big penalties if you repay it early. So once we get to January of 2026, we could repay it early without there being much in the way of penalties. Once we get to May, then we start repaying principal on that. We're always looking for, as I've noted, various opportunities to grow our company. If and as we're able to transact on such an opportunity, the Nabari facility, we're aware that it's not the cheapest cost of capital. And as we grow as a company, if there's a way to shift that around, we will. But we're also very confident that Madsen can carry Nabari as we get to those principal repayments.
Perfect. Well, we are out of time. We've lots more questions for you. We'll send them to you. You can answer on your own, but that just means you got to join us again in the future. Gwen, thank you for this presentation today.
Thank you so much. And certainly send those questions over and I'll reply to each person by email. That's easy for me to do. Thanks for everyone's attention. Really appreciate it.
All right, everyone. We'll be right back.